Michael Lewitt, how fragile is this economy?
I think it's very fragile. It's obviously not quite as fragile as Europe, but you know, we've had a steady flow of data that's been very, very negative, and you know, everybody's just hoping to see some sign of an improvement. But you know, the best we're getting is like a flat unemployment claims number, but there's no real sign that things are in any really good shape right now.
What do you mean by the death of capital?
Well, really, the title was intended to really talk about all the ways in which capital is abused and misused and misunderstood. This was a little catchier title, The Death of, but it's really about, you know, capital being a very complex process that needs to be managed in a very careful way. And of course, the regulatory scheme we have in place is doing just the opposite. So it was really a cry to alert people to that fact.
All right, David, jump in here, ask Michael a question.
Hey, Michael, nice to see you. A question on
David,
your view. It's good to see you. A question on your view of the U.S. economy. If we're in slow growth, 1 to 2% growth, and low inflation, 1 to 2%, but we're growing, not shrinking, doesn't that gradually work out of the problem you talked about in your book and the problem you're concerned about on the U.S. economy over time? Allow it to work.
Well, hopefully, you know, it can. The problem is, you know, I believe one of the main things that's slowing growth is just the enormous weight of debt at really every level of the economy. It's true the corporations are in good shape in terms of their cash and everything, but the overwhelming amount of debt, I think, is you know, causing a psychological type of behavior where everybody's basically doing what's in their best interest in terms of preserving their assets, not hiring, and so on. But it just feeds into slow economic growth, and unless we can change the trajectory of the debt, you know, slow growth is going to be with us. And the problem with slow growth, of course, is if you have a financial accident, you know, that can very, you know, easily slip into recession.
Here's a note from Michael Lewitt, folks. Let's bring it up here. Borking the budget. He walks through a whole political process. The reason the stock market is losing ground is because the U.S. economy is in terrible shape. There's no way to ignore the mounting evidence that the economy is slowing. And you fold on that, Mr. Lewitt, this idea from CBO and Elmendorf. You know, Elmendorf yesterday. Victor, come on over here before you go to the chart here. This is the actual physical document that David Kotok, Michael Lewitt, and I. This is not hard to read, folks. It's a 6-page executive summary with no differential equations, and you should read this as a citizen of the company. The summary, there it is, Victor, right there. CBO summary. This is a great public service by our government. Now let's go to the chart. This is the chart that's in the report. Michael Lewitt, you look at the new projections going back to 1940. If we screw this up, it's the worst situation since 1948.
Yeah, look, I mean, I think we're at a very key point here. There is a real opportunity to deal with this problem. There's very little sign that our leaders are prepared to do it. And it's not just the political leaders. I think that it's important to understand that the business leaders in this country have an obligation as well, and they're not meeting it. They continue to focus on their narrow interests. We have to get this budget, the trajectory of debt reversed sooner rather than later. You know, if the best we can hope for is slow growth, that's not going to cut it.
I love this insight. Let's the business leaders. What would you like to see from the chairman of Emerson Electric, the president of General Electric, etc.? What would you like to see, David Kotok, from our business leaders?
Well, I would like to see business leaders say to congressmen, Democrats, Republicans, House, Senate, stop the bickering. We won't support any of you. We're going to have to organize a replacement of incumbents if you continue the divisive behavior that delivers maybe your next election and fails the nation. Right. Business leaders don't say that to political leaders.
This is a big issue. Every time I go to Davos, this is a huge issue, folks. Richard Edelman just does a great job on this with the Edelman Trust Indicator. Michael Lewitt, what do you want to see from our CEOs and our chairman now?
Well, what I'd like to see is more of, what David said. It's what Howard Schultz is doing to some degree with, gathering guys to withhold their contributions to campaigns until this is fixed. But, we need something deeper. And what we need, I think, is a consciousness that just, if a company thinks it's doing well, it's not going to be doing nearly as well if the rest of the country's not doing well. There's a focus on narrow interests. Part of it comes from our legal system where everybody has to be a fiduciary. But we need a new way of thinking where leaders will understand that the greater good is their good as well, and that rather than all the lobbying and the focusing on their own interests, that there has to be an economy-wide understanding of where they fit in and what their responsibilities are, and it would be a pretty radical shift.